Tom, what do you make of this idea that, as Kaplan was alluding to, the Fed kind of changes course and then these things just normalize? Is it linear like that, or does it take a little more than just kind of one thing goes up like interest rates and then speculative assets go down?
I mean, we're in an extraordinary period because the Fed has been so accommodative, and I think investors have really benefited from this long enough that taking away the accommodation and tapering is going to be a huge adjustment. So I don't think anything's going to be linear, and I think there is going to be a lot of market adjustments that take place once markets begin to realize tapering's taking place. So it could be very painful in some areas of the market, yes.
Now, analysts will come on our air. We'll talk to sources that point to a couple of areas that I want to get your thoughts on. They point to things like the meme stock activity. They'll point to SPACs, to NFTs, non-fungible tokens, to crypto as evidence of kind of these pockets of excess in terms of what they've been seeing with regard to price activity. How do you kind of assess these various areas and those that are more sensitive to monetary policy?
You know, I think we're going to know as we get closer to a period of adjustment what is grounded on fundamentals and what's supported purely by liquidity or by, you know, the reflexivity, assuming other people are buying things. I don't necessarily agree that NFTs or crypto is actually in a bubble in that manner. And I think it's, you know, as you know, SPACs are largely just a capital structure. And so I think there are going to be some SPACs that can take advantage of this, and there's going to be a lot of, you know, sort of de-SPACed entities that might re-rate. But, you know, it's going to be a winners versus losers. And, you know, as Warren Buffett says, it's really going to be a moment when the tide goes out and we can see who's wearing a bathing suit.
Yeah, that is one of my favorite Buffett quotes as well. Where do you see the winners and losers? What types of companies can be opportunistic here?
Well, you know, I think there's a lot of things that have changed since the start of the pandemic. You know, one is that there are a lot of businesses that have fundamentally drastically reduced cost, and that benefit is going to be decades of re-engineering, right? Over 18 months, they had a chance to really take a look at their operations and cut costs, and I think a lot of S&P 500 companies fall into that category. But even in places like leisure and theme parks, you know, like a Six Flags, these companies have done a great job of really rethinking how they serve and delight customers. So it's not as easy to say the whole market should have a drastic adjustment. And then I think there's, you know, really a demand story out there. I think there's a lot of pent-up demand, and, you know, we are seeing things where more investments coming, whether it's people moving to the suburbs or supply chains moving to America. These are really big structural changes, and maybe they hurt companies outside the U.S. So I think it's a really important question, you know, once accommodation sort of starts to come off. But I do think it's not something to say that the entire stock market will, you know, have the rug pulled out from under it.
Interesting. So what do you think is going to happen with the broader stock market? As you listen to Fed officials speak this week, Chair Jay Powell speak today, have you changed your assessment for what the stock market looks like moving forward?
I think the stock market in 12 months is in great shape because we're in the midst of an expansion, and there's a lot of pent-up demand, and there's, for the first time in a long time, you know, real demand growth. But it would be incorrect to say stocks will sail through a Fed tapering easily. I think I think everyone should brace for a period of volatility, and then it's hard to tell if that sell-off starts before the Fed because the market's anticipating it, or if it's in response to the Fed. But I would expect a lot of turbulence, yes.
All right. Well, we'll be looking out for that. I will say it's what keeps our jobs interesting, and we appreciate your commentary. Tom Lee, thank you for being here.